Welcome to The Explainer. Today, we're diving straight into a massive headline. KSPI drops 10.84%. CXMT and NVDA pressure Korea's AI chain. Now, I know we've got our super cute little character Lauro hanging out on the screen here, but please don't let that adorable face fool you. We are unpacking an absolute market bloodbath today. We're going to look at exactly how a historic high-flying weekend for AI deals flipped into unprecedented market panic by Monday morning. We've got a lot to cover, so let's move fast and look straight at the data. Negative 10.84%. Yeah, let that sink in for a second. That is the sheer brutal magnitude of the crash we're dissecting today. The KOSPI index wasn't just, going through a healthy correction. It was completely decimated in a single trading session. The index plummeted all the way down to 6,023, and it gets worse. Intraday, it severely breached that critical 6,000 psychological level, falling to a low of 5,992. That is literally the very first time we've seen a break below 6,000 since mid-April. This wasn't a gentle slide, it was like falling off a cliff edge. And the reality across the board was just brutal. Just an absolute sea of red everywhere you looked. But notice where the deepest cuts actually happened. The electric and electronic sectors took the absolute hardest hits by far, dropping a massive 13.6% overall. So how did we get here? The transition from pure euphoria to total panic took less than 48 hours. Let's trace it. On Saturday, Korean and American companies announced a massive $950 billion cooperation in semiconductor and AI infrastructure. Market highs, right? Everyone's thrilled. Then Sunday rolls around, and news breaks about NVIDIA's financing. Fast forward to Monday, China's CXMT goes public. And just like that, market sentiment completely flipped overnight. Okay, so what exactly was the primary catalyst for Monday's panic? Two words: China, supply, risk. Essentially, two huge things happened simultaneously. First, China's largest DRAM maker, CXMT, started trading on Shanghai's STAR market, which gave them access to massive expansion funding. Second, reports hit the wires that China is finally producing domestic deep ultraviolet lithography equipment, and CXMT, they are first in line to get it. Now, you might be wondering, why on earth does that cause a stock market crash in Korea? Well, it all comes down to commodity DRAM pricing. DRAM is a highly sensitive type of memory product, meaning any increase in global supply translates directly into downward price pressure. So, an expansion in Chinese memory supply means a flood of new chips hitting the market that ramps up downward pressure on commodity DRAM prices, which basically instantly shrinks the expectations for pricing power and profit margins for the incumbent giants. This strikes right at the beating heart of Korea's memory chain. But the exposure is kind of split here. On one hand, you have Samsung Electronics carrying massive direct exposure to that commodity DRAM pricing risk. On the other hand, you have SK Hynix, which is heavily involved in high-bandwidth memory for AI. But here's the wild part. Despite incredibly strong AI demand, SK Hynix still faced a severe valuation discount right alongside the rest of the memory sector. And the immediate fallout for these large-cap stocks was just staggering to watch. The market priced in that loss of pricing power pretty much instantly. SK Hynix closed down a shocking 14.65%, and Samsung Electronics plummeted 13.39%. But hold on, because the China supply shock was really only half the story. The secondary catalyst that really compounded this absolute panic was AI demand doubt. Alphabet and Intel had just dropped their second quarter results, and they showed capital expenditures that blew way past their own cash generation. So suddenly, investors are looking around and starting to doubt whether this massive global spending spree on AI infrastructure is actually durable in the long run. And that doubt completely exploded on Sunday. A report came out claiming that NVIDIA was in talks to guarantee up to $250 billion for OpenAI's Ohio data center lease. This blurred a really critical line in the sand. Think about it. When a supplier starts guaranteeing a customer's financing, investors are forced to step back and reassess. They start asking, wait, is this true independent customer demand? Or are these massive chip purchases just being artificially propped up by the suppliers themselves? That reassessment triggered severe collateral damage. Semiconductor equipment companies fell hard, sure, but look further down the chain. AI infrastructure power stocks, companies like GAN Cable and LS Electric, absolutely plummeted. And why does that matter? Because these companies have zero direct exposure to Chinese DRAM. Nothing. They fell purely because of the sudden panic and the steep discount the market placed on AI data center expansion. The sheer panic we saw in the market's microstructure was truly historic. Right at the opening bell, KOSPI 200 futures nosedived so aggressively that a sell-side sidecar was triggered at 9:06 a.m. just to halt program sell orders. But guess what? The selling didn't stop. It actually accelerated. By 10:13 a.m., the KOSPI index itself had plunged more than 8%, activating a level 1 circuit breaker that halted all trading on the entire exchange for 20 full minutes. Unbelievable. But if we dig a little deeper, buried in all this chaos are some fascinating hidden market signals. Check out this massive flow divergence. Foreign investors executed an absolutely staggering sell-off, dumping a net 4.99 trillion won of KOSPI cash equities. But who was sitting directly on the other side of that massive trade? Individual retail investors. They stepped right in and executed a fierce opposing buy-in to the tune of 4.33 trillion won. And this foreign exit, it was incredibly laser-focused. Out of the 4.8 trillion won that foreign investors yanked out of the electric and electronics sector, SK Hynix and Samsung Electronics together accounted for a whopping 97.2% of the total foreign selling. So they weren't just blindly selling off Korea, they were surgically excising direct memory risk from their portfolios. Which brings us to canary number 1 in the data. Retail investors aggressively bought the dip. In fact, 90.9% of their net buying was strictly in Samsung and SK Hynix. They might have looked at the China supply panic and judged it as a severe overreaction, or, more likely, they were prioritizing near-term facts, specifically SK Hynix's upcoming July 29th earnings release over those longer-term geopolitical fears. Then we have Canary 2, which reveals a highly tactical move by foreign capital. Watch this. While they were busy dumping 3.2 trillion won of direct memory risk in SK Hynix, they were simultaneously buying into SK Square and SK Inc. So what are they doing? They shed their direct exposure to the highly volatile DRAM price cycle, but maintained partial indirect exposure to the semiconductor space through equity stakes in those affiliates. Really smart positioning. And Canary 3 confirms that this wasn't just a total run for the hills abandonment of the country. Foreign investors took their cash from those equities and actually bought over 11,000 contracts of 3-year Korea Treasury bond futures, while at the same time selling off 10-year futures. They are clearly positioning for a rate decline strictly in the short term. This is a tactical shift into temporary safe havens, definitely not a total exit from Korean assets. So the crucial takeaway here is that we have to contextualize the broader market reality. Yes, that massive headline number was absolutely terrifying, but look closer. Large capitalization stocks fell 11.3%, while mid-caps only fell 6.2%, and small caps, they fell just 4.2%. The data clearly proves that this was a highly concentrated surgical tech shock aimed squarely at AI and memory chains, rather than some total macroeconomic collapse. So we are left with a massive question today. Was this violent repricing just an emotional overreaction by foreign capital, or is this combination of expanding Chinese memory supply and supplier-funded AI infrastructure a dangerous new reality for the market? If you would like to receive news on the closing of Asian stock markets before the New York stock market opens, please subscribe.